Chicago drivers got hit with something most people never saw coming. In 2023, the 10 largest auto insurers raised rates on Illinois drivers by over $1.25 billion. With a B, Chicago rates specifically jumped 34% to an average of $2,532 per year. But here's the part that should make you angry. Illinois is one of only 2 states in the entire country without a review process for auto insurance rate increases. That means insurers can raise your rates without any regulatory scrutiny. No justification required, no oversight, no limits. Today, I'm exposing the hidden surcharges buried in your Chicago auto insurance. The weather premiums, the theft zone penalties, and the litigation costs that are silently draining your bank account. And I'm going to show you exactly how to fight back. Let's start with some context that puts Chicago in perspective. According to 2025 data, the average cost of full coverage in Illinois is around $1,900 to $2,100 statewide. But Chicago, we're looking at $2,421 to $3,432 depending on which source you use and which zip code you're in. That's $520 more than the Illinois average and significantly above the national average. Here's what makes Illinois unique, and not in a good way. The no oversight problem. Illinois is one of only 2 states without a rate review process for auto insurance increases. What does that mean practically? When State Farm, headquartered right here in Bloomington, wants to raise rates, they just do it. When Allstate in Northbrook decides premiums should increase, there's no regulatory body saying, wait, let's examine your data. In 2023 alone, State Farm subsidiaries raised Illinois rates by $364 million. Allstate added another $210 million in increases. Combined, these 2 Illinois-based companies account for 40% of the state's auto insurance market. And you had zero recourse. The rate increase trajectory from 2022 to 2024, auto insurance rates in Illinois increased by approximately 26% to 28%. That far exceeds the national average of about 22%. The average annual cost of full coverage rose from roughly $1,600 in 2022 to over $2,000 by late 2024. For 2025, Insurify projected another 6% increase, bringing the average to around $2,886. If you're not actively managing your policy, you're losing ground every single year. Now let's talk about the hidden factors actually driving these increases. First up, weather. Illinois is the 6th most likely state to experience tornadoes, averaging 54 per year, with 63% occurring during peak season from April through June. But 2024 was particularly brutal. The July 15th derecho, a widespread windstorm, was the most prolific tornado event to impact the Chicago forecast area in recorded history, spawning 32 tornadoes in a single event. Every one of those storms translates to comprehensive claims: damaged vehicles, broken windshields, hail damage, flood losses. Insurance companies spread those costs across every policyholder in the affected region. Here's how this affects you specifically. If you're in a high-risk weather zone, which includes much of the Chicago metropolitan area, you're paying a weather surcharge built into your comprehensive coverage premium. It's not itemized on your bill, but it's there. What you can do: 1. Evaluate your comprehensive coverage cost versus your vehicle's value. If you're paying $400 annually for comprehensive on a car worth $8,000, that's 5% of the car's value every year. After 3 years, you've paid 15% of the car's worth for weather protection. 2. Increase your comprehensive deductible. Going from $250 to $1,000 can reduce that portion of your premium by 15% to 25%. 3. If you park in a garage, especially in hail-prone areas, make sure your insurer knows. Some companies offer garaging discounts of 5% to 10%. Here's the surcharge that hits Chicago drivers hardest: vehicle theft. Chicago set an 11-year record in 2023 with 29,063 vehicles stolen, more than triple pre-pandemic numbers. 9 out of 10 Chicago neighborhoods experienced more thefts in 2023 than in 2022. The most victimized neighborhood? Englewood, where one car was stolen for every 23 residents. Think about that. If you live on a block with 46 people, statistically 2 cars on your block were stolen that year. The TikTok effect. More than half of all cars stolen in Chicago by September 2023 were either Hyundai or Kia models. This was driven by social media trends showing how to bypass these vehicles' ignition systems, a vulnerability in models from 2011 to 2021 that lacked engine immobilizers. Theft claim frequency for these models was almost 7 times higher than for all other makes in the first half of 2023. If you drive a 2011 to 2021 Hyundai or Kia, you're paying a substantial theft premium, whether you realize it or not. Good news, bad news. The good news, vehicle thefts in Chicago dropped to about 23,135 in 2024. Still elevated, but trending down. Manufacturers like Hyundai partnered with police departments to install free engine immobilizers. The bad news, insurance premiums haven't dropped to match. Insurers price based on multi-year claims data, so even if theft rates decline, your premium won't immediately follow. The zip code effect. Your premium is heavily influenced by your neighborhood's theft statistics. A driver in Lincoln Park, 60614, pays a different rate than someone in Chatham, 60619, because of vastly different theft frequencies in each area. Strategic response. 1. If you own a high-theft vehicle, install aftermarket anti-theft devices and inform your insurer. Many offer 5% to 15% discounts for steering wheel locks, GPS trackers, or kill switches. 2. Park in secure, covered parking whenever possible. Comprehensive claims, including theft, are reduced when vehicles are garaged. 3. Check if your vehicle qualifies for a manufacturer security upgrade. Both Hyundai and Kia have rolled out free software updates for affected models. Now let's discuss the surcharge that's hardest to quantify, but affects every Chicago driver: litigation costs. Illinois is an at-fault state, meaning when you cause an accident, you're financially responsible for damages. Injured parties can sue, and Cook County juries have a reputation for substantial awards. This social inflation, the trend of larger jury verdicts and more litigation, is a major driver of premium increases nationwide, but it hits particularly hard in dense urban areas like Chicago. According to recent data, Chicago experienced 299,133 total crashes statewide in 2023, with 1,240 traffic fatalities. That's a lot of potential lawsuits, and insurance companies price accordingly. The uninsured driver problem Illinois has a 16.3% uninsured motorist rate, meaning roughly 1 in 6 drivers on Chicago roads has no insurance. When they cause accidents, they can't pay, which means insured drivers either absorb the cost or claim against their own uninsured motorist coverage. This drives up everyone's premiums. What this means for you: 1. Never carry state minimum coverage if you have assets to protect. Illinois minimums are $25,000/50/20. $25,000 per person, $50,000 per accident bodily injury, and $20,000 property damage. Those limits can be exhausted by a single moderate injury. 2. Carry robust uninsured/underinsured motorist coverage. With 16% of drivers uninsured, you have approximately a 1 in 6 chance of being hit by someone who can't pay. 3. For net worth above $500,000, add an umbrella policy that extends your auto liability coverage to $1 million or more. Now that you understand what's driving your premium, let's talk about how to reduce it. Strategy 1. Shop multiple insurers annually. According to 2025 data, the cheapest insurers in Chicago include State Farm, Travelers, and auto owners, but rates vary dramatically by individual profile. For a baseline driver with good credit and clean record, we're seeing quotes ranging from around $1,300 per year at the low end to over $3,000 at the high end. That's a $1,700 spread for identical coverage. Get at least 5 quotes. Include both national carriers and regional options like Country Financial, which has consistently high customer satisfaction ratings for Illinois drivers. Strategy 2. Leverage the credit score connection. Illinois allows insurers to use credit-based insurance scores. Drivers with poor credit can pay nearly triple what good credit drivers pay, around $298 per month versus $99 per month according to MoneyGeek analysis. If your credit has improved since you last shopped for insurance, you could see significant savings just from that factor alone. Strategy 3. Optimize what you already have. After shopping and fixing your credit, the remaining savings come from optimizing your policy. Stack every discount you qualify for bundling, safe driver programs, defensive driving courses, and even paperless billing. On their own, they seem minor, but together they can cut premiums by 20 to 30%. Next, reassess coverage and usage. If your car's value has dropped or you drive less than 12,000 miles a year, raising deductibles or switching to usage-based insurance can reduce premiums by 15 to 40% without sacrificing protection for major losses. Step 1. Document your current coverage. Pull your declarations page and understand exactly what you're paying for, including liability limits, deductibles, comprehensive, collision, and add-ons. Step 2. Assess, changes, review. Any life or location changes, moves within Chicago, paid-off loans, credit score improvements, or household driver updates that could impact your premium. Step 3. Gather competitive quotes. Get at least 5 quotes with identical coverage limits from national and regional insurers, including your current carrier, to ensure a true comparison. Step 4. Verify discounts. Ask directly about every possible discount bundling, affiliations, alumni status, and recent defensive driving courses because insurers rarely offer them proactively. Step 5. Review coverage adequacy, confirm your liability limits, protect your net worth, typically at least 100/300/100, and consider adding an umbrella policy if appropriate. Chicago auto insurance is expensive because of a perfect storm vehicle theft, severe weather, high litigation costs, and a regulatory system that lets insurers raise rates with little oversight. You can't change those forces, but you can shop annually, maintain good credit, stack discounts, optimize your coverage, and avoid driving vehicles that are easy theft targets. In Chicago, paying attention versus doing nothing can mean $800 to $1,500 a year or $8,000 to $15,000 over a decade, even more if invested wisely. That's real wealth created by being an informed consumer. If you want more ways to protect your money, subscribe. See you!